Ladies and gentlemen, good morning and welcome to Elecon Engineering Company Limited Q3 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Binay Sarda from Ernst & Young. Thank you, and over to you, sir.
Thank you, Michelle. Good morning to all the participants on the call, and thanks for joining this Q3 FY23 earnings call for Elecon Engineering. Please note that we have mailed out the results and the presentation, and as well as it has been uploaded in the stock exchanges. In case if you have not received the same, you can write to us and we'll be happy to send it over to you. Before we proceed to the call, let me remind you that the discussion may contain forward-looking statements that may involve known or unknown risks, uncertainties, and other factors. It must be viewed in conjunction with our business risks that could cause a future result, performance, or achievement to differ significantly from what is expressed or implied by such forward-looking statements. To take us through the results of this quarter and answer your questions, we have with us the management of Elecon Engineering, represented by Mr. Kamlesh Shah, Group CFO, and Mr. Narasimhan Raghunathan, CFO. Mr. Kamlesh Shah will give a brief overview of the quarter gone past, and then we'll open the floor to Q&A session. With that said, I'll now hand over the call to Mr. Kamlesh Shah. Over to you, sir.
Thank you, Binay. Good morning, everyone. Ladies and gentlemen, a warm welcome to our Q3 FY23 conference call. I hope you all have had a chance to go through our results and presentation. We are pleased to report healthy financial performance during the quarter, and we expect the growth momentum to sustain in the coming years. The global economic activity is witnessing downturn amidst high inflation and resulting tighter monetary policy due to Russia's invasion of Ukraine, which has led to increase in energy prices. Despite global economic slowdown, the Indian economy continues to show high resilience to global shocks on the back of strong government capital spending and pickup in the manufacturing activity. World Bank has recently raised India's FY23 GDP forecast to 6.9% from 6.5% earlier, as the domestic economy is well positioned to weather global slowdown compared to most other emerging economies. Nevertheless, we continue to monitor the external situation and have been taking appropriate measures to streamline our cost structure and mitigate the overall impact due to rise in input cost. Despite global economic headwinds, we remain confident of the growth prospects and retain our consolidated revenue target of Rs 2,000 crore by FY24. Discussing the Q3 FY23 result at a standalone level, the total operating income increased by 63% YOY to Rs 304 crore compared to Rs 186 crore in the corresponding quarter of the previous year. The EBITDA on an absolute basis increased by 112% YOY to Rs 71 crore as compared to Rs 34 crore during the corresponding period of the previous year. This translates to EBITDA margin of 23.4% in Q3 FY23 compared to 18.1% in Q3 FY22. We closed this quarter with a net profit of Rs 48 crores as compared to Rs 16 crores during the corresponding period of the previous year, reflecting an increase of 206%. Coming to consolidated financials of Q3 FY23, the operating revenues increased by 43% YOY to Rs 389 crores as compared to Rs 272 crores in Q3 FY22. EBITDA increased by 69% YOY to Rs 89 crore versus Rs 52 crores in Q3 FY22. The EBITDA margin stood at 22.8% in Q3 FY23 as against 19.2% in Q3 FY22. The consolidated profit after taxes increased by 99% to Rs 63 crores for Q3 FY23 as compared to Rs 32 crores in the corresponding period of previous years. Return on equity increased to 20% 9 months FY23 compared to 14% in FY22, while return on capital employed increased to 23% in 9 months FY23 compared to 18% in FY22. Current ratio improved to 2.1 in 9 months FY23 compared to 1.6 in FY22. Net debt equity has come down to 0, while working capital cycle has reduced to 81 days as compared to 91 days in FY22 due to our focused approach in bringing down receivables. We would like to inform you that the company had a net cash position of 66 crores and outstanding retention amount stood at 66 crores as on 31st December 2022. Coming to the rupees 60 crore plus arbitration awards, customers have shown interest for amicable settlement, which is a positive development. We continue to witness healthy demand across our end users industries despite headwinds in the global economy, which resulted in stronger order intake worth rupees 1,023 crores in the gear business and rupees 177 crores in material handling business during the 9 months FY23 at the consolidated level. As on 31st December 2022, orders on hand in the gear business is rupees 563 crores and in the MHE business, the order on hand is rupees 157 crores. Now coming to the new product development initiatives, Elecon continues to widen its product portfolio by leveraging its unmatched technological know-how and R&D capabilities. We have designed and developed high-speed gearbox which finds its uses in steam turbine, compressor and blower and has a domestic market size of around rupees 70 crore per annum. The company has also enlarged its planetary gearbox product portfolio and introduced central drive planetary gearbox for the cement industry, having domestic target market of around 50 crores per annum. We are pleased to announce that Elecon Engineering was awarded as one of the top 10 gears and gearbox manufacturers by Industry Outlook for our unwavering focus and dedication to achieve excellence in quality and delivery. We continue to explore opportunities to establish ourselves as a preferred supplier to OEMs in European market and invest in global brand building exercise. The company will continue to focus on expanding its global footprints and enhance its market penetration in existing geographies, which is likely to increase our overseas revenue and result in the next leg of sustained growth for the company. As such, we remain confident of increasing the share of overseas business revenues to 50% of the total revenue by FY30. Also, Elecon continues to strengthen its leadership position in the domestic market with its unwavering focus on new product development. In line with our ESG commitment, 70% of the energy is currently generated from renewable sources and over 85% lighting sources has been converted to energy efficient LED. Our facility comprises of around 4,000 square meter unused land which has been developed into green belt area, and the company today boasts of 60% green campus. Among other environmental initiatives, the company has reduced uses of wood by almost 40% by adopting nailless packaging, employed rainwater harvesting solutions to conserve rainwater, and built sewage treatment plant to reuse sewage water. As part of social engagement, Elecon has been undertaking various health-related initiatives such as blood donation camp, health activities for community, health heart walkathon, and health and safety awareness programs in nearby villages. The company continues to promote sports activities and provide necessary food support to society by undertaking activities such as food distribution for needy, support to weaker sections of the society, organizing education program and initiative for special persons. Inclusiveness is the core of whatever we do, and the company continues to promote sustainable supply chain and has been championing the cause through business partner meet, dealers and channel partner meet. We continue to build sustained workforce by ensuring health, safety and empowerment of our employees, nurture leadership skills through our leadership development program, and inculcate a culture of continuous learning. With that, I thank you all for listening in, and we will be happy to address your specific queries about the business going forward. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and 1 on their touch-tone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Pratik Kothari from Unique Portfolio Managers. Please go ahead.
Hi, good morning and thank you. So my first question is in our MHE segment, the order inflow and order book seems to be going very strong. So some qualitative highlights if you can share.
Yeah. Now I think this quarter we got a good inquiry and we received an order also, and that will continue. But our focus is on supply of materials and after sales services. These orders are all related to the supply of materials mainly. There is no order related to the EPC work.
Okay. In the presentation, we have mentioned about half of this inflow has come from power. So anything specific here?
So basically, this is,
we have Mr. Bashin, who is heading our MHE division, and we also have Mr. Nanda, who is heading our gear division. Yeah, I think Pratik, Mr. Bashin will give an answer to this. Yes.
Sure. Thank you.
as you are aware that we are not taking any EPC contracts, we are only engaged in supply of equipment. We also would be giving supervisory services. And power, we have certain orders which have come to our way, that is Stacker and one or two wagon tipler orders.
So as such, we are having a dominating position in power sector, particularly for MHE division, which is there. So as a part of the replacement and upgradation, requirement of the customers from power sectors, these orders are there for us.
Okay. So this is not this 3 new thermal power plants which are yet to come up, which you mentioned in the presentation. This has nothing to do with that, right? This is just replacement of older power plant.
Correct.
Okay. So this is an additional opportunity that we see. We have some inquiry pipeline, etc., for the new power plant.
Yeah, it is there. So we are evaluating that all the inquiries, and wherever I think we find suitable to as per what the present our strategy is there, we are going to participate for that.
Okay, fair. And sir, given our what your target that we have shared for next year of 2,000 crores, just qualitatively, how are we prepared to achieve this in terms of? I mean, we did speak about new products that we have developed. In terms of new geography, new clients, anything that you can highlight, how are we moving in that direction?
Yeah. Mr. Nanda, I think from gear, who is heading the gear, will just give an update for that also.
Yeah. You see, basically, we will be continuing our, order intake from the core sectors, where we are already very prominently working, like steel, sugar, cement, power more so on the FGDs, where we are. And selectively for our spare business also will coming from the power sector as a matter of fact. Then material handling also. These are the area what we'll be looking for. Apart from that, we'll be also targeting the new product, which has been highlighted already, mentioned by Kamlesh Bhai in his opening remarks and all that, based on that. And then, of course, we'll be also focusing on marine business, basically, we are developing some new prototypes to be really for certain, overseas, who is sourcing is from us. Apart from that, there are some projects are also lined up, from the Indian Navy. That also we are trying to target. So all this will be adding up to the numbers what has been projected, as a matter of fact, Yeah. And in addition to that, export also will be our focus area, which we are really going to look at it, and we'll be looking at, how we are going to do it. From OEM business, we'll be targeting more from here. That will also help us to really get a more on that. Yeah. Thank you. Okay. Anything else you want to know?
Sure. So lastly, on gears again, one, what was the export number this quarter? And second, the order inflow seems to have slowed a bit. We used to do about 100 crores a month, 300 crores a quarter. Seems to have been down to about 200 crores on the standalone part. So anything to read into this?
You see, primarily we have, these numbers are not really, as you already noticed, but we have a big plan as far as the exports are concerned. We are trying to deploy our own team out there at various locations. Apart from whatever we have our entities there, that is going to help us But in addition to that, we also support them. Our own people are going to be positioned there at various locations. In addition to that, we are also targeting some of the, some segments, like South Africa as well as Australia, where we see a lot of potential. In South Africa, we are looking at to position our own office, as a matter of fact, to really help us on that. We are already trying to take some help from the Australia. So all this will be adding up. What action we have taken will really increase our numbers going forward on that.
Okay. What was the number this quarter?
30 crores.
Okay. Great. Thank you and all the best.
Thank you. We have the next question from the line of Shubham Agarwal from Equitas Investments. Please go ahead.
Thank you for the opportunity. So my first question, recently 2 weeks back, I think Railways came out with so there was a news from Railways that they will be ordering multiple wagon tipplers. So, sir, I wanted to know whether we will benefit out of this, and if so, what is the opportunity size because of this plan?
No, this wagon tippler Railways have come out with a new specification. Earlier specification was very stringent, 140 ton each wagon tippler. Those sort of wagon tipplers are not there in the market. Nobody manufactures, neither people can give the coal with that wagon. So they have revised the specification, and it is easing us. Whatever designs we have got, they will be meeting the new specifications of the Railways.
So yes, any opportunity will come up from the wagon tippler from Railways, that will definitely be under this revised norms. It will we find ourselves qualified for participate.
Okay, so all in all, it's some time away before this opportunity comes in, right?
Yeah.
Okay. Sir, secondly, I wanted to have a clarification on page number, financial guidance where we have given for the consolidated number. So for the last quarter, we are giving a EBITDA guidance of 84 crores, which is lower than what we have reported this quarter. So any specific reason why we are giving our guidance or tapering our guidance for the Q4?
Generally, this is an engineering sector and capital goods sector, you can say, both mixed. So generally Q1 and Q3 are comparatively lower because in Q3 number of holidays are there in terms of Diwali and Christmas, and somewhere they also are consuming their available leaves. So generally, if you see historically, the Q3 numbers are generally lower.
Correct.
But Q2 and Q4 are always healthy if we compare on a quarter-on-quarter basis also.
Yeah,
we are confident that whatever the guidance we are given, at least that will be achievable for us.
So that's why the question, because I think this page mentions Q4 guidance as 84 crore and our Q3 number EBITDA is 89 crore. And because historically Q4 has been a better quarter, I wanted to know why we are reducing our guidance for Q4.
We have maintained our guidance, what we are given at the beginning of the year. Anything better will come, definitely it will get reflected on an actual license basis.
Okay. Sir, we have been investing a lot in overseas business. I think Mr. Nanda briefly touched upon. But I wanted to know if there is any breakthrough or any update that you would like to share in that we have already hired so many people overseas.
You see, all these sections which I just narrated, will certainly bring results, but it is a bit premature as of now to really talk about it. As we really start getting results on that, we'll certainly share with you on that. Yeah.
Okay, thank you. That's it from my side.
Yeah, I think we are seriously discussing with certain overseas customers who are OEMs also. But once it will get material, then only it will make sense for us to talk anything about that.
No, fair enough.
Thank you. The next question is from the line of Himanshu Yadav from Nuvama Wealth Research. Please go ahead.
Thank you, sir, and congratulations for a very good set of numbers. Two questions. One, if you can, give the order book split further. Gear division, you said 563 crores. So how much of that is at the subsidiary level? Second, since that part of order book has remained relatively softer and MHE has seen good order accretion, so is it a quarterly thing, and do you expect gearbook orders to remain strong in FY24 as well? Some color on that. And second question is, in terms of the high-speed gearbox, is it something similar to what Triveni Engineering makes, and is it the same market where we'll be competing in?
I just give the numbers related to standalone and standalone open book order book position. The rest of that, your questions will be taken care by Mr. Nanda. On a standalone basis, my open orders as of 31st December in gear division is 497 crore, and in MHE it is 157 crore.
As for high speed, you are right. This is identical to where Triveni is. But in addition to that, we are also focusing for overseas market as well. In addition to the domestic, that's what we are really going to embark upon.
So, sir, the softness, 297 you're saying, so are we seeing any softness in order inquiries or some delay by customers in finalizing orders domestically in gear side?
Yes. In fact, we already talking to two parties, as a matter of fact, which based on which we are really worked out all these plans, as a matter of fact, where we have a committed supply to be given to them. In addition to that, we are also exploring other opportunities also on that.
No, sir, I meant to understand. This softness in standalone gearbox order book, is it something which is a temporary quarterly thing and you expect it to bounce back, because we are maintaining our guidance of 2,000 crore? So some color on that side, please. This is my last question.
Yeah, definitely. There is some softness there from the customer side. They are sitting on the order, waiting for some of the developments, and based on that, they are going to release the order. That is what it is. So far as the FY24 numbers are there, considering our focus, our strategy, we are quite sure and confident that we are going to achieve the 2,000 numbers, what we are giving us.
Thank you, sir. That is it.
Thank you. The next question is from the line of Anish from Girik Capital. Please go ahead.
Yeah, hi, sir. Good morning. So just one question which is related to the margin. So we did one of the best gross margins among many quarters, which is like 48%. So how do you see the sustainability of that, and what led to this very good?
Mr. Anish, I'm sorry to interrupt. I would request you to use your handset to ask a question.
Yeah, am I audible now?
Yes, please proceed.
Yeah.
Can you please repeat your question?
Yeah, good morning, sir. So my first question was on the gross margins, which we have achieved of 48%, which is pretty good among the many last few quarters that we have seen. So if you could give some explanation of what led to this kind of a gross margin improvement, and how do you see this, let's say, for Q4 and the next year?
So earlier also, in the previous quarter also, we are saying earlier we were doing our pricing review on a yearly basis, but considering all the uncertainties and the development on the global economies, we are continually reviewing our pricing, and that is what is making us able to sustain this gross margin.
So can it be said this 48% is pretty much sustainable for say Q4 and FY24, given your strategy around pricing?
Yeah, it is. Generally it is sustainable for us, but it may undergo a change due to the product mix on a quarter-to-quarter basis. But on an annual basis, yes, it is sustainable for us.
Okay, and my second question, we are expecting close to 30% growth in FY24 on a console. So, what kind of visibility are you getting from the customers in terms of being able to grow at similar rate, even beyond 24, let's say in FY25? So, how do you, expect the growth to pan out in FY25, given the CapEx cycle that has to be made?
So for the FY24 numbers are there. I think we have put our study upon that. We have also studied the market for this, considering that high inflation in the Western countries and the availability of the supply chain. These both are the challenging over there. So under such circumstances, we are finding ourselves, more comfortable and confident to enter into that, the market, OEM market, which we are looking for in Europe, and also the further expanding our footprint in Mexico and other part of Southern America and Canada. We are, based on that, we are thinking that, this 2,000 numbers is quite achievable for us.
Sir, but my question is for FY25. So, do you have some kind of a understanding or ballpark, how are you looking at growth beyond FY24?
After 24th, yeah, maybe presently it's too premature to spell out the numbers, but what the numbers we are looking for, because after achieving a 2,000 crore, the same, 25-30% growth will not be there. There may be a consolidation process will happen. So my growth during that time will be between 15 to 20% on time. But yeah, it is a ballpark figure, but maybe after some time we may be able to foresee how we are going to do this also.
Okay, sir, I'll come back in the queue for more.
Pardon?
I'll come back in the queue for more questions.
Yeah, maybe Q1 of the next year would be more comfortable for us to spell out the number.
Okay, sir. Thank you so much.
Thank you. We have the next question from the line of Naisar Parekh from Native Capital. Please go ahead.
Yeah, hi. Good morning, and thanks for taking the question. I wanted to understand on the capex side. So once we reach 2,000 crores in FY24, what would be our utilization at that level, and what is our capex plans for the next 2 to 3 years?
So average, we are looking for 100 crore investment after we reach to 2,000 crore, because post that we have to have that future visibility will be more clear to us, and our target for the global footprint and global market share, which will require that additional capex for that.
Right, but at 2,000 crore, what would be our utilization?
At 2,000 crore, we are just going to have our utilization to nearly 75 to 70, between 75 to 80%.
Understood. Got it. And last time you had mentioned, about EV and the fact that you are, exploring that. So any progress on that, if you could talk about that bit?
I think there's no such progress in this quarter, but maybe I think we may talk about that in the next year sometime.
Understood. Got it. And on the defense and, marine navy side, obviously that is, that has been a stronghold for us. So, any expectations of orders, or what kind of orders should we, are we expecting, or what kind of tenders are we expecting in say, FY24?
Mr. Nanda will answer for this.
See, there are two areas we are focusing. One is the Navy, where we have the marine area, where we are focusing. We expect almost, there are a couple of projects are all lined up. I know what is going to materialize out of that, we can expect maybe 100 crores next year. And some of the products which we are really trying to develop as a prototype for one of our party who is really sourcing is from, Europe, as a matter of fact. There also we expect maybe around 25 to 30 crore business to come in from there. In addition to that, we also have a separate cell we have really created for land system, basically. We are exploring the transmission items, basically, where we can really develop and all. So that process is on, but it's a bit premature, as a matter of fact, to talk anything at this number for that. But as we really come, final on that, then we'll certainly share with you all those details.
Got it. Thank you. Just one last question, if I can squeeze in. You were talking, is there for our export markets, besides us growing organic, are we looking at any partnerships or acquisitions? We've spoken about that once, but is there any update, or are we looking at something in the near term?
It's too premature, and let there no time to come to presently. Let's consume our capacity available with us, And the way in which the European companies are, facing a challenge for sustainability, that may create an opportunity for us for the small companies which is in the good market base and the customers, which will help us to explore further.
Okay, sir. Thank you so much. I'll come back into queue.
Any acquisition, if any in future, will not be from the cash and from the borrowings, but it will be strategically within equity swap or the other alternate opportunities for us.
Got it. Very helpful. Thank you.
Thank you. The next question is from the line of Sanjay Satpathy from Ampersand Capital. Please go ahead.
Sir, when in your opening remark you talked about gas price and macro concerns. In fact, most of those, like say gas price, for instance, has fallen quite a lot. So you were far more confident when the prices were much higher than today. I don't know what really changed. If you can just tell us.
No, this is the thing which is presently, we think in India it is there, but at the overseas level, these are still quite challenging for them. Recently in the Europe also that, the gas prices or energy prices has gone up. So we have not found any clarity from that, government sources about that, how it will get rationalized over there.
And sir, you talked about your March quarter being much bigger than any other quarter because of seasonality. And we have seen that typically it is about something like 10-15% higher than the previous quarter, like quarter 3, quarter 2. Is that seasonality likely to continue this year as well?
Generally it is so, because generally Q2 and Q4 for engineering sector is quite better, even for the others also. And Q1 and Q3 is generally on the lower side. And that will, I think, is a general tendency. If anything happens, something better, that is in an exceptional scenario.
No, my question is that do you have the order book or the order pipeline to really give us a feel about how Q4 will be like compared to the kind of seasonality that you typically see in the past?
Yeah, that's what we say. The Q4 will be better than Q3 in terms of the numbers. And, we are quite confident to achieve that numbers what we have spelled out. If anything better it is there, that will be actualized as and when it is happening. But it is quite sure we are going to sustain 1,200 crore at the standalone and 1,500 crore on a consolidated.
Understood. And so last question that I just wanted to understand that in the past your material handling business used to drag you down a bit, and that problem has been kind of resolved. So now that it is over, like how are you really looking at a bit of a medium term your margin outlook? Will it be much better than what you used to see in the past? And the other thing is that now that your balance sheet is much more, there is hardly no debt anymore. So are you in a position or are you looking for a much more aggressive growth target?
No, we will still continue the same because still that uncertainty at that PSU level, where I think generally we are getting the business in power sectors and otherwise, that is still sustaining. So we don't want to go aggressive. Let it come at the mature level. During that time, we'll do. Though we have the debt free and we have that capability, but let's focus presently on the supply of material and after sales services. So we are evaluating the opportunities and considering the strategy what we have lined up, we will like to go with that strategy only.
Understood. Thanks a lot, sir.
Thank you. The next question is from the line of Harshal Sethia from AUM Fund Advisors LLP. Please go ahead.
Sir, in the next year when you are guiding for 2,000 crores of top line, what kind of EBITDA margins will we be able to do? Will we do like the 23-24% which we are doing currently, or will it go to our previous band of 20-21%?
We'll go with our console level. Our EBITDA margin we are sustaining at 22% because when we are going for the 2,000 crore, and we also have to strengthen our brand. So there is a cost related to brand building also. And when we are expecting to supply to OEM, so we will not get the same margin from the OEM compared to what we are getting from the replacement market. So we are sustaining the 22% margin only. If something better is coming up, that will definitely be there also.
Okay. Thank you.
Thank you. We have the next question from the line of Dipen Shah from DS Investments. Please go ahead.
Yeah. Thank you so much for the opportunity. Several questions have been answered. Just a couple of questions. If you could just throw some more light on the marine opportunity which you spoke about in the gears business, like anything more specific which you can tell us about what are you looking at and how big the opportunity will be. And the second question is in the MHE business, we have seen profitability coming back, so if you can just give us some more color on that business, whether profitability can further improve from the current levels or whether we should expect similar kind of profitability in the next year. Thank you so much.
See, regarding marine, as I mentioned earlier, there are a couple of jobs are there, which has already, some projects have already been announced by Indian Navy and Coast Guard, So that few of them will get materialized, year by year on basis, So we expect, as I mentioned, job which is getting materialized based on that, the number which I shared with you, basically. So there are many other jobs also which will be also there in the pipeline, which will really happen maybe year after that, and following year, So that is the way it is. There are good opportunities what we can see in marine, Indian Navy as well as Coast Guard, which is really there with us, And as I mentioned, apart from that, there are some overseas supplies also we'll continue to really do, which we are developing for them, those models and all that.
And sir, just to interrupt, anything further on the other defense arms? Like we were a couple of quarters back, there was some mention about us entering into defense in a big way. So apart from Navy, the other arms, are we looking at further orders?
Yeah, that's exactly which I mentioned. We have created a cell for land system, basically, which we are really examining. What are the opportunities which we can really convert for us, taking our core strength, from utilizing that and all. We are already working on that, but it's a bit premature as of now to talk about it. But we are already working in that direction, very seriously on that.
Okay. And on the MHE business, the margin picture, sir?
Yeah. So far the MHE is concerned, definitely that we are expecting there is a little bit improvement in the margin going forward. And however, the growth will be at the average, maybe 20 to 25% growth only we can expect, because we don't want to go aggressive and go in the EPC. Though the business opportunities are available, considering the uncertainty of the execution from the customer side, and otherwise we don't want to again go in the same loop. So that's why we are a little bit cautious.
Okay. Thank you so much and all the very best.
Thank you.
Thank you. The next question is from the line of Ankit Papel from Shubhkam Ventures. Please go ahead.
Yeah, good morning, sir. Sir, a couple of questions. You mentioned that you people are in talks with a lot of OEMs in the overseas countries, but discussions are at nascent stages. So just wanted to know, now assuming if you succeed in getting tied up with any such OEM player, just wanted to understand how big can that opportunity be per customer?
Yeah. That opportunity is OEMs, because Europe are the world leader for supply of the engineering products and machines and equipments. So, as and when it will get materialized, definitely that will be a breakthrough for us and will create an opportunity to pitch in the OEM markets in Europe itself. So we think, but presently it may, even if anything is getting materialized, presently it may be difficult for us to spell out the numbers, how big it will be, but whenever it will come, we are expecting that it will be, and it will be also on a ramp-up basis, because we cannot supply from the day one what they are expecting the numbers to go up to the top at the peak level also. But that opportunity will definitely be at least minimum of 50 crore to 100 crore.
Okay, and what could be what could be the potential number of such customers which you can target, say, suppose in the European continent, say in the coming 2-3 years?
So numbers, naturally, I have some ready to get the numbers, the OEM numbers, but I don't know how actually I can be right on the numbers, but what the numbers presently the lineup, because the inquiries are many with whom we are working for. which may be 10, 15, but how much it is getting converted? Because my conversion ratio from the replacement market in overseas or in India, we can spell out because with our experience and otherwise. Here, our experience are very limited, so numbers will be, difficult. How much inquiry will be converted into orders? But presently our discussion are going to happen with 9 to 11 customers are OEM customers are there with whom our team are discussing about the business opportunities.
So just wanted
3 and 4 are already visited our factory over here, our facility in India.
Okay, so just wanted to confirm in your FY24 guidance of 2,000 crore revenue, have you factored in some prospective revenue from such new OEM customers?
Yeah, we have.
Is it incrementally everything which whatever growth is coming is through these OEMs only? In your
actually, we will have the better business from the OEM, and that will create an opportunity for us for the replacement in the global market.
Okay, and you also mentioned that the margins in the OEM business are relatively lower. So could you just give a ballpark idea that would be in what range, like 15%, 18%? How much less compared to your existing margins?
I think it is, Mr. Baba, it's too challenging for me to spell out the numbers now.
Okay.
But definitely, it will not be the 22% what we are doing because OEM is much smarter than me also. And the OEM knows the cost better than what I know about my cost. But yeah, definitely it will be because we also have our own threshold. Below that we don't want to go aggressive. So far as the OEM market is there.
Okay, that's it, sir. Thank you so much.
Thank you. The next question is from the line of Shurat Diora from Paladin Capital. Please go ahead.
Yeah, hi. So I just wanted to ask you further on this OEM question. Currently, in your sales in both divisions, you're selling directly to the customer only, right?
In overseas?
No. In India, your sales are all direct to the customer, right?
No, we also have the sales through OEM in India. In India, we are well placed so far the supply to OEMs are concerned.
And what percentage of the sales is to OEM today?
Pardon?
What percentage of your sales are to OEM?
Sorry to interrupt, sir. We are not able to hear you.
Better now?
Yes, sir. Please continue.
Yeah. What percentage of your sales is to OEMs today versus direct?
In India?
Yes.
Yeah. In India, I think presently we are just to OEMs. We are selling, particularly in the material handling, our gear business through the material handling business side. So, and including the steel and cement, mainly in the core sectors, it is nearly 17 to 24%.
So about 20% of your total sales is through OEMs today, and the rest is directly.
Yeah, directly.
So, and in the export market, as you increase your presence in the export market, it will be through OEM customers. It will not be direct sales. So that's broadly your strategy, right? To partner with companies with whom you can increase your market share.
Correct.
And these companies are currently sourcing their equipment, their gear requirements from your competitors who might be European companies.
Yeah, correct, absolutely.
So you will have, you're trying to use your cost advantage to basically increase your wallet share with those customers.
Not only it is not the price war through which we are going. We are going with our quality, sustainable quality and uninterrupted supply. That is main focus for us, not the pricing.
So your competition is European customers, or is it Chinese customers?
Yeah, European customers only. The European suppliers.
Yeah, sorry. Your competition is European suppliers or Chinese?
Yeah. Or Europe. Chinese cannot sustain so far as these particular products are concerned, gear products. Okay. So there is no competition from China as of today.
So if you look 3-4 years out, today your percentage from your total sales is about 20% is through OEM. So 3-4 years out, what percentage could it become?
No, presently the 20% what we are talking about is in India. In overseas, it will be a separate. So once it will start, one breakthrough will create and will open the doors for the others also for us. So I think it will be maybe next year will be a better position for me to spell out that how the opportunity will be there in terms of the numbers, in terms of the sectors also of the OEMs.
Okay, understand. Today, just one clarification. Today, export is what percentage of sales?
Presently, my export as on today is 10% from India.
Okay, fine. Okay, thank you.
Thank you. The next question is from the line of Gunjan Kabra from Niveshaay. Please go ahead.
Thank you, sir. Thank you for the opportunity. So a couple of my questions have already been answered. One question which I had is that there are a lot of announcements in marine also and in railways also. So wanted to understand that in which phase of the announcement, from announcement to execution, in which phase do we receive orders? Because normally it takes around 2 to 3 years to execute a project. In what phase do we come in and we receive orders?
You see, you are right. It takes 2 to 3 years, even more than that also sometimes. It takes that. But whatever we are trying to spell it out, we just mentioned a little while ago, the projects which have already been announced quite earlier may not have really been noticed by you people, but they are already there. Those projects are there, which are getting materialized year on year. Actually, we are talking about on that. So it could take after the announcement sometime 3 to 5 years also, because first the order will be placed on the shipyard, by the Indian Navy, or the Coast Guard will place the order on the shipyard, and the shipyard will be inviting tenders, and then we'll be getting the opportunity to supply them. So it takes, even after that also, it takes one and a half year to really start supplying and all that.
Okay. And likewise in railways also?
Pardon?
Railways. Likewise in railways also?
Railways, it is slightly earlier. In fact, Navy takes a little longer time, as a matter of fact, on that.
Because of the sensitive area, considering the securities and other parameters, it takes time. And it is coming through not directly from Indian Navy, but their counterpart, which is called the Majgaon Dockyard, Garden Reach, Cochin Shipyard, like that.
Okay. Thank you so much and good luck.
Thank you. We have the next question from the line of Shivam from Nuak Tech. Please go ahead.
Hello, am I audible?
Yeah, absolutely.
Yeah. Thanks for the opportunity and congrats for the results. I just want to ask that what all other regions are we targeting except Europe in the export opportunity?
No, we are targeting the global. Europe, we are more focused on the OEM market, because Europe is the leader in the Western countries to supply the gearboxes. But our presence is global, and we are now focused more on US, Mexico, Canada, and South America also, over and above Europe itself.
Okay.
And also we are exploring an opportunity in Australia aggressively. There mining activities and others are there, which are creating the opportunity for us to supply the gearboxes over there.
So in the other regions also, it will be through the OEM route only?
Not necessary. It may be through distributor route, or it may be through OEMs are generally based out of Europe only, mainly. And so far the other local players are there in the other regions, like in Australia or maybe in Brazil or other countries of South America.
And sir, are we setting up our own distribution branches also in Europe, like to cater the export, or it will be directly through India, like no teams would be there of yours?
We already have that our branch offices through under a separate subsidiaries in the Europe itself.
Okay, in which country do you have the branch offices?
We have the assembly center in Sweden and a small center in Netherlands, but we have our branch offices in France, Germany, Finland, Denmark.
So the branch offices are set. Okay.
Yeah, it is already set.
Okay.
And in fact, we are strengthening the resources by putting more business development and marketing fellow in these branches.
Okay. And sir, on a domestic side, I just joined the call later. Can you elaborate on which sectors are you seeing the good demand coming from?
Mainly from the core sectors which are dominating in terms of the demand, which is steel, cement, power, material handling division, and sugar. These are the 5 sectors which are dominating, over and above the others are there.
Can you give your sectoral percentage of revenue, if possible?
Presently, I don't have the sectoral level revenue, but I think we already have given the order intake on the sector wise. So that itself we can consider as a revenue, because that is as such is going to be converted into revenue only. It is there in our presentation.
Okay. And so what will be the margins like we are expecting in the export business that we are around developing?
Yeah, naturally the margin will be better in the export. So which is already there if you see in our presentation for this Q3 and Q4, what we are having the guidance of 24% margin. So that is, include the margin from export, which is having the better margin. That's how we can spell out. But, giving the exact numbers may be difficult at this point of time.
And so any elaboration on the OEM margins that will come and the distribution model margins that will come, if you can just give a guidance?
Yeah, distribution generally comes through a replacement market where I think we have the better margin, and OEMs are concerned, yeah, because in OEM I'm getting the volume. So when there's a volume game is there, I think margin will also be has to come in that line on. But if I convert if I'm spreading my fixed cost over the higher volume, and if I'm spreading my fixed cost with a lower volume, naturally that benefit will come to us all.
Can you give a ballpark number for both?
I don't know how to spell out. Let me have a big chunk of the OEM supply. Then only it will be better. But I think it will be better than 15% plus margin.
Okay, and the replacement ones will be around 24, 25 or above that also?
No, replacement market is generally between 20 to 22%. That is how it works out.
Okay. So thank you so much, sir. Thank you.
Thank you. We have the next question from the line of Chinmay Kabra from NK Global Financial Services. Please go ahead.
Hi, sir. I just wanted to know, I missed out, regarding your branch offices which have been set up in Europe, Sweden. Just wanted to know whether the OEMs will be manufactured in India and then sent out, or how is it going to be functional? If you could just repeat it, please.
No, we have the assembly center in Sweden, and we have the small assembly center in Venlo also. So depend upon how that works out. But our idea is, the parts will be supplied from India, which we call it as a kit, and it will get assembled in Sweden. And if required by the customer, we can, if the options are available, it will be preferable for us to supply directly from India only.
Okay, thank you, sir. That's the only question.
Thank you. The next question is from the line of Manish Goyal, an individual investor. Please go ahead.
Yeah, thank you so much. A couple of questions. Sir, if I probably try to get better perspective on the guidance for FY24 of 2,000 crores, if I just look at your outstanding order book, it is at 720 crores on a consolidated basis. It is still lower than the FY22 year-end order book of 732 crores, and particularly in gears, it is almost down by 7-8%. So is it that we are probably looking at very strong order inflow in next few months, which will probably help us to reach that guidance of 2,000 crores? And if you can just break up that 2,000 crores between, say, standalone and subsidiaries, how it will look like?
Yeah. Earlier also I said, now, with base of improvement in our overall production cycle, which has now reduced the production cycle for our standard product as well as for our engineer product. So that because of that, you find that the numbers are not there, which generally you are looking after in 21 or 22 numbers like that. This is one. So far, the other things are concerned, on a standalone basis, we are looking for 1,500 crore turnover for FY24, and on console level, we are looking for 2,000 crore. That's how we have spelled out that. Third thing in terms of, we have that, orders in pipeline, so that definitely will be there. That, plus or minus, on a comparison basis will be there also. But so far as the numbers are concerned on actualization, that will be based on what the strength of our production facilities are there.
So you are saying 1,500 crores in standalone versus 1,200 crores. So on subsidiaries, you are expecting 500 crores versus 300 crores.
Yeah, correct.
So if I probably look at subsidiary order book outstanding, in fact, sequentially, it looks like it has fallen from 150 crores to 66 crores. So what gives us that confidence, sir, that we should be able to have that 500 crore revenue? Because right now the order book seems to be quite low.
Yeah, generally in Q3 order book position is low because of the holidays, Christmas holidays over there, and in Europe and the other part of the Western countries, they are taking the longer leave so far as the Christmas vacations are concerned. The same is also here in India also. In India also we are having the, in the Q3 we are having the two vacations. One is related to Diwali, which is generally in India it is there, and as well as in the December. Christmas holidays are also there, though it may be a very limited order, but generally in respective companies, employees are consuming their leaves. So that is also giving an impact on the order inflow.
And sir, would it be possible to give standalone order intake number for Q3 and 9 months? Because till previous quarter you were giving standalone numbers, and this quarter you have given console numbers. So can you please share the order intake numbers for standalone?
My order intake for Q3 in at standalone level was 200 crore, and on console level it is 279 crore in gear, and in MH it is 83 crore. So in standalone level our Q3 numbers is 283 crore for the domestic, and on console it is 362 crore.
Sorry, can you repeat the gears at the console level?
Gear sector console Q3 order intake is 279 crore. And MHE we don't have the export, so we consider this it's all domestic and console both same. It is 83 crore. Both put together is 362 crore for Q3 order intake.
Okay. And sir, in your presentation where you have given the order inflow breakup for MHE, looks to be some error over there because that total is coming up to 107%. So maybe if you can rectify that going forward, and it will be very helpful. And sir, so on margins, you believe that we should be able to improve or maybe maintain the margins, because again we are seeing commodities prices increasing, and will we have ability to pass on that price increases?
Yeah.
Cost
so
increase.
far, you are drawn the attention for the error. Let me just check. If it is so, I will correct that also. And so far the margins are concerned, yeah, we are going to maintain the margin what we are already spelled out as a guidance for that FY24.
Thank you so much, sir.
Thank you. We have the next follow-up question from the line of Pratik Kothari from Unique Portfolio Managers. Please go ahead.
Sure. Sir, in recent one of the industry publications, there was this mention of two new technologies which have come up. One is the magnetic gear replacing mechanical gears, and also you have motors who by themselves now control speed and torque, and hence you don't require gears. I mean, I don't understand too much technicality of it, but if Mr. Nanda can speak about the relevance of it, the size of it, the technical aspect of it, please.
See, what you're talking about is the gearless technology we are talking about, but that is very far-fetched, Basically, in some of the application, it may be applicable. Some gearless like lifts are there, you'll find it, they are already using it, But all the applications which are really prevalent as of now, there is nothing to really obsolescence to happen as far as the gear technology is concerned. It is can't be visualized, it can be removed. I mean, obsolescence will happen basically. But very cost is very prohibitive as far as this gearless technology is concerned, basically on that. And that too also, where some applications where they can use this technology you are referring it to. But in applications, what we are talking about the steel, sugar, cement, power. We can't even think about really going gearless,
Okay, and about magnetic gears, there's a mention about magnetic gears.
Yeah, you see, it is coming from the same, on the same front, but basically trying to remove the gears, technology, that is how it is really happening. So in the sense, the exact technology which is really there, that is getting, out of this thing, and then going gearless, on the other front.
So present, considering the cost versus the technology is too high cost, it is very costly to replace with the existing technology. So at appropriate time, it will be there. So our team is also watching about that, and we also, our internal systems is also studying about this gear technologies.
Okay. Fair enough. Thank you, sir.
Thank you. The next follow-up question is from the line of Naisar Parekh from Native Capital. Please go ahead.
Yeah, thank you. Just one clarification. When we say for us, overseas versus domestic revenues, right? Where is this overseas reported? Is all subsidiary revenue overseas revenue? Just if you can give some clarification, please.
These all overseas are the 100% subsidiary of Elecon Engineering Company Limited, and they are reported under consolidated.
And the standalone does not have any overseas revenues or exports?
Standalone will have the exports. So that export is, is a part of my overseas business only.
Okay, so overseas is basically the 10% exports in your standalone business plus all the subsidiaries, right?
Correct. Absolutely.
Yeah, okay, fine. Thank you so much.
Thank you. Ladies and gentlemen, as that was the last question for today, I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Yeah, thank you very much for all the participants for showing interest in our company. And if any questions are there, please feel free to connect to Mr. Binay, who is our IR from ENY, or Mr. Narasimhan, who is the Chief Financial Officer of Elecon Engineering Company Limited, or Ms. Bharti Srani, who is the Company Secretary of the company. Thank you very much, and have a good day to all the participants.
Thank you, sir. On behalf of Elecon Engineering Company Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.